In today's video, I'm going to show you exactly how to record the impact of a business expense paid by a director in Xero. This is a very common situation, especially in small businesses, where a director uses their personal card or cash to pay for something on behalf of the company. If you record this incorrectly, your accounts and director's loan balance can end up wrong. So I'll walk you through the correct way to enter it step by step and explain what's happening behind the scenes in your accounts. If you find this helpful, make sure to like and subscribe for more simple Xero tutorials. Let's get started. When a director pays for a business expense personally, the business now owes that money back to the director. In accounting terms, this is usually recorded as owner funds contributed or posted to a director's loan account. The key idea is that the expense belongs to the business, but the cash did not leave the business bank account. First, log into your Xero account. From the top menu, click on Business, then select Bills to Pay. We're going to create a bill to properly record the supplier expense. Click the green New Bill button. In the From field, type the supplier's name. This is the company where the item or service was purchased. For example, it could be a stationery supplier or software provider. If the supplier doesn't exist yet, you can create a new contact. Next, enter the date. This should match the date shown on the receipt or invoice. This keeps your records accurate and ensures the expense is recorded in the correct reporting period. Now move to the line item section. In the account column, choose the correct expense category. For example, if the director bought office supplies, you might select 461, Printing and Stationery. If it was travel, choose your travel expense account. Make sure the account reflects the true nature of the cost for accurate reporting. Enter the full amount shown on the receipt. Double-check everything, and once you're happy, click Approve. At this stage, you've recorded the expense, but you haven't yet shown how it was paid. Now scroll down to the bottom of the bill and click Make a Payment. In the Amount Paid field, enter the full total. For date paid, use the actual date the director paid for the expense. The most important step is the Paid From field. Instead of choosing your business bank account, select Owner Funds Contributed or your director's loan account. This tells Xero that the money came from the director personally, not from company cash. Then click Add Payment. And that's it. You've now correctly recorded both the expense and the fact that the business owes the director. So what's the impact on your accounts? The expense increases in your profit and loss report, reducing your profit as expected. However, your business bank balance does not decrease. Instead, your director's loan or owner funds contributed balance increases, showing that the company now owes that amount back to the director. This keeps your bookkeeping clean and ensures your bank reconciliation remains accurate. Later, when the company repays the director, you simply record a payment from the business bank account against the director's loan account to reduce the balance owed. Recording it this way gives you clear visibility of expenses, accurate financial reports, and a correct running balance of what's owed to the director. If this video helped you understand how to record a business expense paid by a director in Xero, make sure to hit the like button and subscribe to the channel for more practical step-by-step Xero tutorials. Thanks for watching, and I'll see you in the next video.